Welcome, and here we're looking at the S&P 500 on the 4-hour chart. And as you know, we were looking for a particular correction coming across the 1800 through here in terms of an A wave, a B wave, and a C wave. Now, the B wave has moved up quite high through here, so we just need to be a little bit mindful that that I could have the wave count wrong. So that would be if the 1810 found support here. And then if that was the case, then it just obviously pushed higher through there. Where the wave count would be wrong is in two places. First of all, the ABC could be completed by putting this wave 5 here, because we've got 1, 2, 3, 4 and 5 here, and this would make the A wave here, the B wave here, and the C wave here. That's one way to look at it. The other way to look at it, just for the exercise, is that the A wave is actually in here on this spike here, the B wave is in here, and the C wave is here, and then we push higher through here. We don't have to go there just yet, but if we do find support on the 810, well then we'll be looking for much higher ground through here. We were looking for that anyway, but we were just looking for, as you know, A, B and C a bit more, with a bit more clarity basically through here, an A wave, a B wave. And if we do get the C wave here, it will be pretty much like this here, the A wave in 5 waves through here, and then we'll push up from that point there. So look, we're just at a little juncture here that we just need to navigate as such. So we need to let it play out as well, because from this A wave here, we've got this little A wave here, a little B wave here. That's all nice, and the C wave's always in 5 waves, so a little bit tricky to work out. But what you can see is the third wave here, which is always the strongest. So as in all trends, you have a beginning, a middle, and an end section, and the middle is the strongest because obviously people can see the market moving up, so they all jump in and so forth. So we just need to allow this to play out. But as mentioned, if the 1810 becomes the support, then we need to consider this as being up for wave 1, back for wave 2, a third wave, fourth wave, and fifth wave, and so on, and continuing further to the upside. That would be the same with the DJ as well. The DJ hasn't moved up as high to its old highs like the S&P has. So the S&P would be slightly stronger in that case. If you're trading long, that would be the one to go with. Yes, the Dow can catch up, and it does. So be mindful and be ready to catch that as well. But as we can see here, we were looking for a little A, B, and C to move up through here. And it's working with the 16,000 through here. We know that the resistance here on the cash market, because of this block over here, would come in at 16,072 to 16,100. So what we could say, if the 16,100 became the support, then we can look higher from that point there. Otherwise, we'll just stay with our C wave in 5 waves to move down through here, and once that's complete, then we can look to the upside from there. So look, we've been on track. We've just got a little juncture here. We need confirmation, and that's how the cookie crumbles. The FTSE and the DAX are on the same sort of boat, where normally the DAX has been following the S&P 500, and it still could be the same case again as well, because with the DAX on the 4-hour chart, we were looking 5 waves down here for wave A, and then we were looking for a 61.8 retracement level thereabouts for wave B in 3 waves, the A, the B, and the C. And if that's correct, then we'll move down for wave C, and have I got that here? Okay, so this is what we've been looking at through here. So the A wave, the B wave, and the C wave up in 5 waves. You can pick the third wave. The C wave's always got 5 waves, so you can see that third wave here. Now, When working with the levels, price basically 92 is the closest largest number, and group 1 would be the resistance and group 2 would be the support. So a market falling outside of those bands would be giving you confidence to trade in that direction, and you always trade in the direction of the closest largest number. So you wouldn't trade long from under 92, you would only trade long from above it, and the same you would only look for short positions. But then we use the levels, drill down into the detail and use the sub levels. So that story. So the FTSE is pretty much the same as well, slightly different count. This particular move all through here is very much like the Australian market. We were looking for a wave 4 retracement level up to here, and look, it did pull further up than I expected it to, or the textbook Elliott thing. So the 38.2, so it's gone back up about 50% of wave 3. So, but still we have this particular 3-wave structure here, and I need to be mindful too that I don't think it's the case, but we could get a move up here and that would give us 5 waves up through here. Probably not the case, but just to bear that in mind. So but as it stands, we would look for a move to the downside here to complete this here, and with that in mind, finding an entry point in the 6,550 is the closest largest number. So we need to be working with that here, and we can see that the market is working with that. So what we could use here is we could say that, if this is the top of wave 4 here, then we could look at this 6550 and use the next level down, the 6540 here. If that becomes the retested resistance, then that will give you the short side, but expect it to be a bumpy ride into group 1 here, 10, 20 and 30. If this market was going to push up and we're wrong, then finding support in 6565 on this level here would be the first point. You'd get ready to trade long, but you would trade long on the 72 here as a retested support level there. So they would be your setups for that. And the ASX 200. Right, so yesterday we were looking for it was an interesting day yesterday. Obviously, we didn't follow the US markets, except a little bit on the opening there, but a bit of a bull bear trap there. So we were looking for wave 4 to pull back up 38.2% of the previous wave 3, which was coming in at say 52.33, I think, from memory. It obviously didn't get that far up, but we have got our correction there, and it does appear that we've got 5 waves down through here. Now, there will be support. This is for this particular market through here. If I've got it here, yeah. So we got the 5-1 over here will obviously offer some support on the cash market. That low is at 51.20, I think. So even so, we'll be coming into group 1. There will be support there, and we need to expect a bounce. And the bounce would be, once this is completed down here, which I think it should be, then we'll be looking for a wave 4 bounce. And this wave 4 bounce would be the wave 4 of 1 lesser degree. I do notice with a lot of stock, the majority of the stock market is in bearish mode and has momentum to the downside, and you would only be buying, right on the lows, which I was a bit concerned to do yesterday, as I mentioned in the robo section. But we had to put a couple of trades in to go long just in case, because we had a lot of shorts in there as well. So it's just a bit of insurance and balancing the book, so to speak. But we are we're in minor group 1. So minor group 1 is 100, 200 and 300. And the norm is that once the 52 here, the pivot, the number 2 within a group 1, be it minor group 1 or subgroup 1 or micro group 1, then it really locks it in, and you can start looking at, of course, the 5,000 from that point there. But we were aware of looking at 5,000 on the breaking of the 5,300 back there. So we're still tracking this move down, and as you can see, it is trending down. However, we just need to expect some support to come in through here. If we look at this here, I was looking at counting 5 waves down from yesterday's high here in terms of the 1, the 2, the 3, or 1, 2, okay, the 1, 2, 3, 4, 5 for the third here, the fourth and the fifth here. It does appear that we've got like a little 5-wave structure here, okay? So 1, 2, 3, 4 and 5 here, and an A and a B and a C. So, you know, it would, I don't know, look, if that low gets taken out, then we need to look obviously further down, but that wave 4 here, that's a nice wave 4, an A and a B and a C here, and a little wave 5 down through here. So that can hold through here, but obviously if it makes new lows, well then there's a larger structure unfolding further down. But as you know, there will be support on the cash at 51.20 and support on the ASX CFD at 51 here. If you're going to go long here, if that's the case, then for the SPY and also for this market, the 51.40 would be part of that, or essentially new highs here. As long as if this is a little, let's just have a look at this on a 5-minute chart. I don't have it there, but I do have it on the, this is the futures market here. Not a lot of difference in the price, maybe 3 or 4 points, but from this particular low here, we do have this little 5-wave structure to the, well, up to this point actually. Third wave in the middle here being the strongest. So an A and a B and a C wave here. So if you get support on this 51.40 the next time around, then you can go long from that point there up to the 50 there. But having 5 waves here will give us another 5 waves over here. It just depends on how that grows. So, you know, if support is found on the 51.50, you trade to that number, get out, well, even 48. The orders were building up at 48 there. The support on that will take you further up to 51.72, further to the upside there. But as I mentioned, so you don't have to go long until that is support. Otherwise, this low could be taken out through here, and we've got a cascading move to the downside. But anyway, let's just see how that pans out. This particular market didn't go down a lot overnight as such. So you know, there is some sort of buoyancy, you know, ready to come into this market. So just be mindful of both directions. All right, let's have a look at commodities as they're looking quite firm, because we've got that lower US dollar, which would be part of the mix. Starting with gold, well, as you know, we've been looking for the rally for wave 2 in terms of an ABC rally, and as you can see, we are in wave C at the moment, heading to the upside. There's two sort of a few important points here, I guess, is that any sort of rally here would be, well, a retest of the closest largest number, and it would be the 1300 here, which is the 50% retracement level here, and the 1.8 here for C of wave 2. Once that's completed, we'll see it move to the downside. However, we also need to be mindful too that there is normally equality between wave A and wave C. So we may only see wave C move up to the midpoint here, the 1250 here, and then roll over from that point. So we need to be mindful of that. The idea was to trade long on the top of group 1 as support through to here, and perhaps even add on the 1240, but exit at 1250, or rather the 1248, and then wait to see if you get support. If you get support, there will be an A and a B and a C across the 1250. If there's support after that, then you can trade long from that point there. I'll just see if we've got that here. So yeah, look, it's going to find resistance at the at the 1240 here, so and expect some type of, you know, three-wave price action across here, and then if support is forthcoming after that, then it'll pan out something like this. It will either react here and then push up there and then have the A, the B and the C here, and then you look for support here and go from that point there. If it doesn't stop here, then it'll just go straight above, but the distance above will be the distance that comes below, and then it works across like this and then works up through that way. So either way, silver's the same as well. Its A wave is this length, so we're looking kind of, you know, these old highs here to have equality with the particular A wave here as wave C equals A. But once again, the 50 and the 61.8 retracement level is back up at the 2100 here. So you need to be a little bit mindful of that. So you would trade to the close to the 2000 and exit and wait for support if that's the case. The idea was to trade off the 1950 support off here. And then obviously you trade to the 72, get out, get back in, and trade closer up towards this area through here. So 1990 is obviously going to be resistance, but trading to 1997 because most orders will be at 1998 in this case here. But of course, it also can hit the finishing line and go to 2000. But I find it sort of just best to get out a tad early there at a particular odd number 8. Well, 8's going to have the most orders sitting there, 1998. Anyway, moving on to copper. So with copper, well, we've got a couple of situations here. Is that I think that this is a daily chart, of course, and been over this many times, but an A wave, a B wave in three waves of an A and a B and a C wave here, and then moving further up for the C wave. Now, once it gets up there, then rolling over from that point. Now, this move up through here, look, it can be counted 3 ways or 5 waves, so I'm a little bit sort of dubious of it. So what we need to do is we need to consider two aspects here, that it can be an A wave, a B wave, and a C wave hitting the close, you know, somewhere in the 328 sort of area, 326.50 to 328. And it can fail from that point and roll over from that point. So we need to be mindful of that. And yeah, we just don't have a clear 5-wave structure to the upside just yet. So it's just still in 3 waves. Yeah, look, if it found support on 330, well, then of course we're going up higher. So look, we're treating it as a wave C higher, but I just don't have the evidence for that. The only evidence I do have is this particular market here being in 3 waves. And a move up through here, if this was going to be bearish down here, then it would be bearish in terms of this being down for wave 1 to this point here, and it's overlapped that by coming up here. So I'm reasonably sure that we're going to be pushing higher through here. So as long as the 320, the main level here, the 323's got support, as long as all that area stays intact now, then we'll be heading higher here. And this is important because it's part of the materials sector, the BHPs and the Rios of the world. Well, the obviously, BHP's got other elements to it, but this is a good indicator for base metals as such and the material sector. So it is looking chirpy. It is moving up higher. The next support from here, we've got 323 as support. The next number after 3 is 5, and then the 8 is going to be profit-taking number. So we're going to be moving into resistance through here, and it can fail from here, and we need to be mindful of that. But anyway, we'll continue to monitor that. The oil market. Okay, we've got the bigger picture here. So in a bit of a nutshell, we've got we're looking for 5 waves up here as such, and then we're looking for an A, a B, and a C. And then we're looking for a move up here. This is going to be the supply area in here. that's going to be the resistance, and we're looking for a 3-wave price action here. The number 8 here being an even number is going to have orders there, and we know it's going to help that that move back in. I think we've got this drawn out here. Yes, we have. So look, once again, a trend, no matter what size it is, has a beginning, the building, the middle when everybody gets involved in it, and then the end. Now, this could certainly push up higher through here, but either way, we still need to expect a correction across this level, and the 96.50 is the halfway point between 95 and 98, so that's the important point here. The 50 and the 60 point retracement level of this is back at 95 here, but let's just see sort of how it unfolds as such. But as mentioned, a move up, and then an A and a B and a C, possibly back to here, but I think the 96 area through here would be suffice, and then another 5 waves up through to here. The length of this here should have some sort of equality over here, but getting into 102 and 103, there's a lot of supply there, so it's going to be hard going from that point there. The idea was to trade at 298, get out, wait for the correction, and then re-enter at that stage. If the 98.30, the top of subgroup 1, develops support, then you can trade long off that and continue to the upside. So using the levels, you don't miss anything. The soybean market, this is just the daily chart here, and because we've made a new high here now, I can relabel this to the original count that we had, with wave 1 being up through to here. It may not be an intermediate degree as I've got it labeled, it just may be a minor degree, but we'll just stay with this one, let's count it the way, it doesn't really matter at this stage anyway. But there's a little gap up here that would be a target point up here, but obviously we'd be looking for the next level here, the 1350, to become the support level here. So this particular move up here, we're looking at this as wave 1, wave 2, and then wave 3 to go further up through here. In that wave 3 here, there'll be 5 waves in that wave structure. So we'd be looking at, get this here, so we're looking at 1, 2, 3, 4 and 5 at this level. There'll be more, and then in this third wave here there will be 1, 2, probably 3 to here, maybe to here. I need to do some work on that. 4 to here, 5 to here. It's normally the third wave that hits the level, and the fourth that pulls back, and the fifth is the first high above the level. And the wave 4, as you know, can be quite complicated, especially when wave 2 is simple. We have to expect wave 4 to be complicated and then move up from there. So we're basically building the trade in at every 10 points, as you know. So finding support on 1330, then 1340, and then adding on 1350, and you could add into this area here, the 1372, because we've had a few trades into here. Then it's nice to start giving it some space. Normally the 60% sort of works as well. Anyway, building into that on the long side there now. The wheat market, still don't have anything to report about the wheat market, so I'm not going to go into that at the moment. The corn market, this is a situation here. This is the daily chart all squashed up through here. What we're kind of looking at through here, I don't know if I've nailed this properly, but 5 waves down, 1, 2, 3, 4 here, and then 5 waves down here in terms of the 1, the 2, the 3, the 4, and the 5. I'm not sure about that. I'm pointing this out because we're buying on lows here. Most money is lost in the first 10% of the trend, so we just need to be a little bit diligent about this. So the soybean would probably be the better buy, but what we're thinking here is that, if we're looking at a smooth rollover in terms of volume, in terms of the last contract month into March here, we wouldn't have a new low here. But in this particular case, we do have a new, if we didn't have this low here, then we would have up for 1 and back for 2 and going into wave 3 here. But we don't have that from starting on new March contract. So we have to look at this being 5 waves up through here, and that's what we were looking at. So you could probably do a robo trade through here But what we were looking at over the last few days is we recognised that we had a little 5-wave structure in here and then a corrective move back here. So we're looking to go long on 430, so keep stops at 426, or if you want to be quite safe at 423. Be fine, and looking to add on 440 as well. And the most products on your shopping market shelf have got corn in there or soybean in there. One of those two are in pretty much 95% of products. So there's a reasonable chance that these can tag along with one another. But I don't know the sort of the harvest fundamentals about these stocks, about these markets. As you know, we've just taken these commodities on board, so we're just doing it purely by Elliott and the levels. But as mentioned earlier this week, this is a corrective structure within here, and would expect new highs, and we're kind of seeing that now, so that's good. And the other one, the orange juice that we were looking at yesterday. Now, first of all, I've had a look on the monthly chart, on another chart. This whole rally that we're looking at through here, it would be pretty safe to sort of put it up at the 172 sort of area. Yes, it can go higher, but this is a rally, a corrective rally on a monthly chart, coming down from this is rally moving back up. It came down from 200 all the way down to 100. Okay, so we're looking at this as being an A and a B and a C rally through here. And in a C wave, we've got 5 waves: the 1, the 2, the 3, the 4, and the 5. So as mentioned yesterday, we were looking at trying to figure out really what we've actually got here. And I was a bit couldn't kind of get a really clear understanding. I know we've got waves 1s and 2s in here, the beginning of the trend, the middle of the trend, and the end of the trend. But and it just wasn't quite sort of sure. But I'm a little bit more confident today that that now we've got wave 1 up here, but I don't think wave 1 is finished. I think there'll be 5 waves in there, and I think that this little high here is the top of the 3rd wave, a 4th wave back into 140 as support, and then a little 5th wave up. So we'll allow this to play out here, and once this plays out here, then we'll have 5 waves up here for wave 1 as such. And then we'll have an A and a B and a C. Now, it may not be that big and so forth, but it should be 5 waves, 3 waves, and 5 waves. Once that's done and dusted, then we can look at building a long trade into wave 3 here. Now, if this is not the case here, then the other scenario would be, this is a medium level here, 150. So the other scenario would be that we'll get our 5 waves sort of up to here, and then it would do something of this nature here and come across here more so, and then work up from that point. So we'll catch it here, or we'll catch it here. So we just bringing you into the fold here, and this is, I think I've got this labeled here anyway. Here we go. Got a habit of rabbiting on. So yesterday we were looking at this count moving up through here, and I had a bit of a difficulty in all of this here. I just couldn't quite understand it, but because that's moved up through here, actually that might be the top now. 1, 2, 3, 4, and 5 perhaps. Well, anyway, we'll see, soon see. But I could see 5 waves in here developing, so I was figuring that we've got wave 3 here, an A wave here, a B wave here, and a C wave here. I'm not totally sure about that, but it looks okay now that we've made a new high through here. So we can bring this possibly bring this wave 1 into here, but I wouldn't be surprised if this is a 3rd wave here, then we'll have this as a 4th and one more high here. So it's either here or here. It's not that we're going to not that it makes any difference at the moment, because what we want is the bigger picture trade, and that would be the wave 1 finishing either here or here, and then some type of basically some sort of A wave, B wave, and C wave here for wave 2 here. So we want to see some corrective pattern across here before we go long. But it is moving into place, and we'll keep shooting the breeze over it and see if we can nail it. All right, let's have a look at FX. Okay, US dollar daily chart, 80 is support. It's likely to move through that as well as such, but it's moving down, so the crosses will be moving up in most cases. So on this 4-hour chart here, as I mentioned, coming into group 1, the 30, 20 and 10 are going to cause a bumpy ride. There'll be a bounce off the 80 here, so you need to be mindful of that if you're trading the euro and others. But the bounce here should be sort of contained. If it doesn't find support after the bounce, if the top of group 1 here, the 30, the 80-30, if that finds support here, then it can move up from there. If it fails to find support, it can trade above it. Like the breakout's important, but the retest is more important. If it fails support on 80-30, then you can start looking at it coming further down through here as well. So on the flip side, we'll see the euro still continuing to the upside. And as mentioned yesterday, as long as it stays above the 137, you stay long. Or if the 137.30, which is the next level up, and it's the top of group 1 here, if that finds support, which it is, then it will have further upside to go as well. And the next levels up there, of course, are the midpoint, the 137.50, and then group 2 up here. This is coming into old highs up here, and number 8 is a profit-taking number. Also, this 137.72 here. So when you get 772 together or 272 together, then it carries more weight than just the normal 72. The Australian dollar is doing its bounce off the 90. And so I think that, look, we could have a low in at 90, but at the same time, I think it's more important to consider anything that bounces off 90 as corrective. So as I mentioned before, it's really a matter of treating it as a corrective bounce, and in that fashion, then we keep the trading ranges quite short, and that means using the sub levels. And of course, 91 is a minor trading level as well, so of course we can use that as well. So once again, in using the minor trading level and the next degree shorter, the group 1 above, the 10, 20 and 30, and the group 2 below is normally where, if a market's working to 91, then you've got to bring in group 1 and group 2 as the first boundaries for that filters. If the 91.30 becomes the support, tested support, then you can look to higher ground. It's as simple as that. So we're still in this corrective phase here, and in fact, it's quite possible that we have this is the current high. We can have this as an A wave, a B wave, and a C wave coming down through here. So really allow that to go long here. Really allow that 91. Let the market open and find its feet and so forth. And if it can do that on 91, then you can scale in a small position on 91.10. Then do the same thing on 91.20. You can exit at 91.30 and wait for support there. And if tested support is coming in, then you can go long on that. On the flip side here, if the 90.72 becomes the retested resistance, then you'll get a move down. But you're going to have to be a little bit careful, because the move down would be an equal to this move here. So if that appears to have a little bit more to the upside to go through to here, but there would be some sort of equality in these two here. One of the things here is that if this move down here is in more of an angle than this one here, then you know that this is going to be a strong move and it's going to go up from that point, okay? If it's sharp, then you know that there's going to be, a reaction and then further down from that point there as well. So use the 72 there as retested resistance as always. But we think there's some better trades on the euro pound and also the Australian yen as well. Both of those have got to pull back a little bit into wave 4s before they push into wave 5s to the upside. And you can see those charts in the odd chart section in the Forex section. Alrighty, well, good morning and good luck and enjoy the day ahead. Cheers.